Yeah, good morning and welcome everyone. Welcome to the Capitol Grounds podcast. I am Joe Fisher. I'm here with my colleague Nick Miller. We both are a part of SITG Capital, and we're bringing you a podcast today about the main topic we're going to be talking about is inflation, but we've got some other topics we want to go over. And as always, we want to talk to you about capital, and we want to talk to you about grounds, so real estate. But we're first going to talk about grounds, coffee. So, Nick, how's it going this morning?
Hey, it's going well, Joe. It's going well. We've got a busy week ahead of us. But for our listeners, if you haven't checked out our website, check us out at sitgcapital.com. And Joe, what's in the cup this morning?
Oh man, glad you asked. So first of all, I have this great mug that
Oh
my wife
yeah.
and I got in Puerto Rico. So can you see what the drawing, I guess is what you would call it, is on the front there? You see
Yeah,
that all right?
for our listeners, yeah, it's a beautiful striped mug with purple and green. It looks like, is that a frog? See Puerto
It
Rico, is
is.
that a
Good
frog?
eye, good eye.
Nice.
So it's actually the cookie, which is native to the island of Puerto Rico. And it's like, if you haven't been, it's like kind of a cricket at night. You know how you hear crickets always making noise? Well, in Puerto Rico, it's
Sure.
this frog, the cookie, and it kind of sounds like that. That's I guess why they named it that. Kind of sounds like cookie, at night. So, but it's a great place to visit if you haven't been. And we like to get mugs when we travel because it reminds us, being there, we like to find unique ones, kind of like this one. But I'm actually the grounds that are in the coffee today are actually from Mexico. I'm drinking, I think, a pretty common coffee there called Cafe Combate, and so we've got quite a bit of that. So I'm getting through that before I get into some of the Colombian beans we brought back from Colombia recently,
Mm.
and I'm really excited for that.
Wow, that sounds great. That sounds great. Are you more of a dark roast or a light roast kind of guy?
Ooh, man. So, I thought dark roast, but then I had some blonde roasts over the last year or two, and man, those are really good. I think it just depends for me. Kind of
Really?
depends on the mood and what I'm feeling. How about yourself?
Yeah, well, I think I could be converted, but I have yet to have a light roast that I really enjoy, medium and dark
Oh,
roast,
okay.
little more robust. So nice,
Yeah, that's
man.
definitely been my preference too. So yeah, yeah.
Yeah.
But well, so I want to talk a little bit about our next section, which we're calling State of the Ground. So this is just kind of news that's popped up. And we want to do this every episode and just talk about what's going on. Sometimes there's going to be stuff going on. Sometimes there's not going to be a lot. There's a couple articles that I pulled, Nick, and I don't know if you got a chance to look at them. We'll put them up for our listeners so you can take a look. But recently, Elon Musk, he's always in the news, but he was talking about how he's partnering with Lennar, which they're actually the largest
Home
multifamily
builder.
builder, yeah, in the nation. So, big company. They're partnering up to bring some workforce housing to Bastrop, Texas, which, if, for those of you who don't know where that is, it's Austin, MSA. So a little bit outside of Austin, hasn't been quite as developed over there. And they're bringing some workforce housing, which is important because of the Tesla factory that opened recently. And workforce is actually where a lot of our properties fall into. So thought that was kind of interesting read if you have a chance and you want to take a look at that.
Yeah, it's interesting that so help me understand a bit here. And I haven't checked out the article myself, but I've heard the news.
Yeah,
Is that is it looking? Are they looking to build to rent? Are they looking to, you know, own it from a corporate perspective? What's the game plan there that
sure.
you've heard?
Sure. Yeah, I don't know 100% the game plan on what they have yet. I think it's fairly early in the stage as far as what
Sure.
they're trying to do. I just know, housing is extremely limited. We talk about this all the time. Austin, it's limited. Dallas, it's limited. Houston, all these markets that that we got our start in and continue to operate in, they, you know, the undersupply of housing is very, very real. So, you know, that kind of transitions me to the next article I wanted to highlight, which there's a Dallas. So the Dallas Morning News, they have a business section that's fantastic for those of you who are interested in kind of what's going on in North Texas. But they came out with an article talking about how Dallas has now moved into the number 2 spot for financial jobs. Only place in the
Wow.
US that has more is New York, which I thought was pretty impressive. But why I wanted to highlight that is because we've talked about this before, probably not on the podcast, but we've talked about you know, wanting to be in markets that have diversified job markets, right? And
Absolutely.
Dallas is an extremely strong commercial market, multifamily market, all of that because of the diversification of jobs. So you've got, you know, Goldman Sachs coming here, bringing 2,500 to 5,000 jobs. You got Wells Fargo, and they haven't even included that into the totals yet, you know, for this article. So you have a really well diversified job market here in Dallas, and that is a big reason why we like it and why we're putting a lot of resources into developing in the Dallas Fort Worth area.
Sure, sure. Or Texas in general. I mean, look at, I
Texas in
think
general, yeah.
Schwab set up shop in Austin, right?
No, they're in Westlake, Dallas.
Oh, you're right, Westlake, Dallas. For some reason, I was
Yeah.
thinking that was connected to Austin. Yeah, no. And who else is down there?
Oh man, I mean, Fidelity's got a big center here.
Sure.
Yeah, I mean, you've got companies like where do you think ExxonMobil is based?
I'm gonna have to guess probably DFW.
It is, yeah. It's most people think it's Houston, but it is DFW. So you have that, you have industrial like Caterpillar. You have a very diverse job market. So that really helps, you know, our case when we go in and we look at especially times right now where there's a lot of uncertainty due to inflation, which is our main topic here. You know, there's a lot of uncertainty due to inflation, and people are afraid that there's going to be a recession. We might already be in a recession. I mean, we talk about this all the time. Usually the Fed doesn't come out and say 100% we're in a recession until after that's happened, right? But it's likely we are. And these types of job markets in these types of cities, like a Dallas, like an Austin, make it a little bit easier for us to kind of ride those waves out.
Absolutely, absolutely. And it allows people more flexibility. If you want to talk about upward mobility, the more available jobs in your area, and certainly the different types. I mean, it just allows, it provides opportunity around across the board. So that's fantastic.
Oh yeah, yeah, absolutely. Yeah, Nick, real quick before we move on to the main discussion, you recently went to a conference. Tell us just a small snippet
Yeah.
about that.
Yeah, so for our listeners, viewers who maybe don't know, I'm actually remote here. I live in Lawrence, Kansas currently, and I recently had the opportunity to go to a local commercial real estate conference hosted by Colliers here in Lawrence, and there are a lot of big moves happening in the local area. Panasonic announced, 6, 7 months ago, I want to say, that they are
Yeah,
building an EV battery factory just east of Lawrence, between Lawrence and the Kansas City area, providing 4,000 direct jobs, an estimated 16,500 construction jobs, and then another estimated 4,000 indirect jobs. So the town they're building it in, DeSoto, very small town. Um, and
yeah.
there's a lot of opportunity here. So we,
Hey, I'm gonna guess, just like
sure,
here, there's a
yeah,
lack of housing needed to be able to provide for those new jobs. Is that a safe bet?
yeah, absolutely, absolutely. And Lawrence is a city by itself, regardless of
Yeah,
what's going on. Has a massive housing shortage. It's a growing college town, and yeah, it's already got a need for housing, and so we
sure.
heard from some great people who've experienced other other expansions in the area. We heard from a gentleman who lived out in Reno, Nevada, and I want to say it was Intel that moved in there and, talked about how it vastly changed the area that they moved into and provided just a number of jobs. And we heard from another gentleman who was down in the Phoenix area when a
Mm,
similar firm moved in. And at the end of the day, the big picture takeaway is that this has the potential to create huge waves across the board
sure.
and for the surrounding area. So,
Yeah.
it's something that we're exploring. I think there may be a lot of potential value there, but that remains to be seen.
Yeah. Yeah. Absolutely.
But
No, I
what's
think, I think we've seen those ripple effects throughout the country, different areas. A lot of that's happening down here, but it's good to see it happening in other parts as well. So,
Absolutely. I will say one of the interesting things that um, that they talk about, and we've seen across the board, especially with COVID, across the nation, we've seen a lot of retail, commercial real estate open up,
mhm,
and
sure.
we've seen vacancy rates go up in that space. Uh, Whereas we've seen, there's a lot of demand for industrial real estate, and
Yeah.
you know,
Yeah. If you run an e-commerce business, it needs three times the size of a more traditional business, from an industrial capacity standpoint, industrial space, warehousing, because you have to operate in that warehouse and be able to get things out the door.
Absolutely, absolutely. And you think about self-storage space for a
Hmm.
lot of our viewers and listeners, maybe they're aware that provides or has the potential for a lot of value for a number of investors here in the US, especially Joe, as you and I talk about frequently, as we tend to or trend towards a renter's nation. I can't see
Yeah.
that a self-storage or a storage sort of investment won't continue to be valuable down the road because we're,
Yeah.
we're
Yeah. I
we love
mean,
to buy stuff, right? And
I agree. Right.
we just have a lot of storage needs commercially as
Hmm.
well as individuals.
Yeah. And I think we talked about this on the first episode, but our bread and butter is multifamily. That's really
It
where
is.
we've operated and what we know the best. And to Nick's point, though, really the two areas of the market that have performed the best, and I'm talking about the real estate market in the last 20 years, are multifamily and industrial. So, for us, we're great at multifamily. We know what we're doing there. But down the road, we do want to diversify into some other parts of the real estate market.
Yeah. Yep. Absolutely. Absolutely. But we've got time for that. We've got time to make
We've
those
we've
moves.
got time. We've got time, absolutely. And yeah, so what I want to transition us to, Nick, is talking about our main topic, which is inflation. Now, I don't know about
Oof.
you, but I do feel like people have talked a ton about inflation, right? So we're going to take a little bit different approach, at least to start here. And I want to just go back and tell a history of kind of how we got to more of a modern type of inflation, where we see a lot of government intervention and things like that. And so this brings us to kind of the main topic, which all kind of starts with a murder, a duel. So for those of you who are interested in that kind of thing, it's kind of an interesting start to it. But Nick, do you know the story of John Law at all?
I know a bit. I know a little bit. Yeah,
Okay.
but it's frankly, and as you dig into John, uh,
Yeah.
I would love to see somebody like Johnny Depp. I'm imagining Johnny Depp, Jack Sparrow. I think they could make a great movie out of the John Law story, starring
Oh
somebody
man, that's a great
like Johnny
idea.
Depp. Yeah, yeah.
Yeah,
Look,
yeah.
there's
If we
another
got
investment
if we got any
opportunity.
movie producers listening, yeah, here's a great story. I agree with Nick. Let's make a movie. All of those who like finance, we'd watch it. I can tell you that right now. No, the new Big Short, right? That's what it would be.
There you go. There you go. Or the old one, really. But
Or the old one there. Yeah, you're right. You're right. Well, okay, so I'm gonna get into this, Nick, and
do it.
feel free to stop me as I go through it. But I took extensive notes here on the John Law story. So John Law, he actually grew up in Edinburgh, but he moved to London in
Scotland.
his yes, right, and he moved to London in his early 20s. So he was a drinker, a gambler. Gambling, you'll see throughout the story, is really what he was well known for at the beginning. Um, but kind of what we might call a playboy nowadays. Something along those lines. Well, because of his lifestyle, he ends up getting in some altercation with a guy named Edward Wilson, and they decide that they're gonna have a duel basically to settle this, right? So on April 9th, 1694, in Bloomsbury Square in London, Law and Wilson have a duel. Law ends up killing Wilson. Law's arrested. He's convicted of murder. He's sentenced to die, but thankfully for him, somehow he's able to escape from prison and he flees to the mainland of Europe. So he leaves London, he flees, takes a boat, goes across and starts hopping around to different cities. He's gambling. And he's really successful at it. And the main reason is he actually has a really intellectual mind and understands probability very well. So
Which
he
was a new
starts to
concept at the time.
yeah, it was. I mean, it really was. There wasn't a lot of people you know, that were working in that capacity or could really understand those numbers well, and he did, which was made him a really interesting guy at the time. So eventually, he ends up landing in Paris, and he kind of already has this reputation. He's amassed a decent amount of money. He's got a lot of money for back then, and he kind of has the attention of the government to a degree. Uh,
He's
he
notorious. He's got some
he
notoriety.
is, yeah, exactly, and he has an old acquaintance. The Duke of Orleans is an old acquaintance for him.
That sounds familiar.
Yeah, so we'll get into why that sounds familiar, but at the time, Louis the 15th is only 5, so he has a lot of other people making decisions, and the Duke of Orleans turns out to be, a fairly powerful guy. He is able to kind of help John Law kind of break into some of the social scenes and get more popular, and they start to spend more time together and become more like friends at this point, right? So I'll give you a little backstory on what he wants to do. So Law has an idea. He wants to convince the French government to change their economy. So at this time, they've been at war for a long time. They have a ton of debt, right, because of these wars. And back in the early 1700s, basically the whole economy is running on gold and silver, and it's kind of hard to exchange that easily. So these goldsmiths start coming up with these receipts. People start trading the receipts for their gold and silver, which then they start getting loans. And so this kind of leads to where John Law sees the majority of his opportunity, which is creating a bank, right? And then issuing paper money. So his friend, the Duke, helps him in 1716 set up the first bank in France. So the first private bank is set up in France. And basically, he begins printing money so that people can use that instead of these gold receipts that they've been using. But it's met with some skepticism. People aren't really sure about printing money, especially back then. And so then his friend, the Duke, comes in, gives him another big win in this regard, and basically says that you can use this money to pay for taxes. So that's kind of the catalyst that starts, really making this more legitimate at the time. Um, so really, the French government's backing this, right? So at that point, Law sees an opportunity to basically take what at the time was called the Mississippi Company and start using that to grow to be closer to the East Dutch India Company, where they have a lot of assets kind of put in this company, and you know, they put things like the Louisiana territories into this company. They start putting other parts that the French government has, you know, really kind of control over into this company. And by 1717, the government debt for France has really ballooned. We talked about the wars and kind of how that happened. So Law comes up with a plan and basically says that if you want to invest into the Mississippi Company and buy stock, you can do that with basically government bonds, what we know now as government bonds. So those become, you know, something that you can trade and get something that people perceive have more value in the Mississippi Company. So this starts somewhat of an economic boom, and like I mentioned, the company is taking on more and more of the French economy, and the
Sure.
shares start to rise at that point, right? Not too unsimilar for what we see now. It's just, you know, it's a lot more immediate now, and basically what happens is the company starts at around 500, I think it's livers is what it was called. I'm probably pronouncing that wrong because I don't speak French at all. But around 500 is where it started at in January of 1719, the shares of the Mississippi Company. By December of 1719, those shares price reached 10,000 units, right? So an increase of 1,900% in just under a year.
Which
So
and yeah, I'm going to
yeah,
interrupt you here for a second.
yeah,
You
go
know
ahead.
what I found really interesting about that story is that there were so many people coming to trade, you know,
Hmm.
shares basically. There was no formal place to do that, and so they would do it outside of the, you know, the I don't know, headquarters of, you know, the
Right.
Mississippi Trading Company. And there was such a large, there were so many people that would show up. They ended up installing gates on either end of the street and
Yeah.
blocking it off, which I think
Right.
is
Yeah.
just,
Yeah.
I'm
I
imagining if,
read
you
they
know,
they had soldiers that would have to come out and, you know, kind of get things orderly over there. So yeah, I agree.
yeah, like an 18th
That's
century
interesting.
trading floor, you know?
Yeah, yeah, exactly. What I found interesting too was because that price went up so much, 1,900% in a year. This is actually when the term millionaire was coined because so many people were becoming rich, you know, from basically just investing into the Mississippi Company. But it comes at a cost, right? Because this ultimately leads to what a lot of economists and historians consider the first modern financial collapse. So basically, that price, you know, not sustainable. That share
First
price
meme
is not
stock.
sustainable. Yeah, yeah, exactly, exactly. So it's overpriced based on the assets it holds. You know, they did some marketing on the Louisiana territories. Basically, said that they're worth a lot more than they actually were at the time. You know, there wasn't a lot going on over there at the time. Um, so there's some uncertainty in the market. So John Law basically comes out and says, "Hey, we will buy unlimited quantities of the Mississippi Company at a set price," and he's hoping this will stabilize the market. It actually does the opposite of that because shareholders start selling more and more of their shares so they can get their money back, and you know, in hopes of converting it back to gold. Um, the money supply in France pretty much doubled overnight. And here's where our main topic comes in: inflation takes off. So lots of people are selling their stock back. They're printing more and more money to pay for this. And so shareholders are selling their shares, and inflation gets to a point where it's at a monthly rate of 23% by January 1720.
That's
Um,
wild. That's wild. And I think it's
yeah,
worth mentioning, you know, in this time period, his buddy the Duke, uh, uh, you know, grants him power. He's you
you're
know,
right.
he's put
Yeah.
into a position of power within the French government where he's able to, you know, enact laws and have some sort of influence over the economy. Um, but Joe, let me interrupt for a second here. You know,
Sure. Yeah.
I think this is a good spot to take a quick break and just give our viewers and listeners an idea of what SITG is, we'll just, before we get to the good stuff, take a quick marketing break, if you will. So bear with me just a moment here, and we'll go from there.
Check us out at sitgcapital.com. We got a full list of our current portfolio, current investments that you can be a part of, as well as some educational material that kind of ties into what we're doing here with the podcast. So thanks for listening to Capital Grounds. And again, check us out at sitgcapital.com. Thanks.
Hey, welcome back. Thanks for your patience there. Thanks for taking the time to learn a bit more about who we are, what we do, and again, check out our website. But Joe, please, we've got a great story going on here. Tell us more about John Law and how his how his adventures turn out.
Oh man, yeah. Well, we're almost at the story end of the story here. So right before the break, I mentioned, inflation is at 23% in January of 1720 in France. So people are, they're going crazy. Um, they decide to basically make a run on the bank and exchange all their paper money back to gold or silver. And like you mentioned, Nick, at this point in time, John Law is actually very powerful in France. He's kind of, he's one of the top dogs there. Him and the Duke are really kind of running a lot of things. He's really running the finances. So he decides to start banning production of gold and silver any way he can. At one point it's outlawed except for religious artifacts. So the wealthy are making larger chalices made of gold and things like that, saying they need it for their religious ceremonies. So when that doesn't work, he decides to start devaluing the money, and this ends up leading to riots, and he's basically ousted from France at this point. Flees to Italy, starts gambling again to sustain himself, and all this. Meanwhile, France kind of rejects paper money at this point and goes back to gold and silver coin. And John Law ends up dying in 1729 in Italy. So that's the story of really the first, what historians and economists call the modern, the first modern tango we had with inflation.
And arguably the first pump and dump scheme as well,
It might be, yeah. So again, let's make a movie on this thing and let's get some more
Yeah.
information out there.
Disney, tell us more. I think it's interesting, all of that. He put so many what are now parts of, everyday parts of modern finance. He put so
Oh yeah,
many,
he did.
implemented so many of those concepts,
Right.
and just, made a couple of key fatal errors. And I'd be curious to know, driven by greed, ignorance, what have you. But ultimately, it benefited us, America, right? Because I
Yeah.
think it eventually led to the Louisiana Purchase. Am I wrong?
Yeah, down the road it did. Yeah, yeah, absolutely. It wouldn't come for a while longer, but
Right.
yeah, it's a very interesting story, and one that I think, like you said, we can pull a lot of things away from that we actually use in modern finance today. Our central governments use, et cetera, right or wrong. So, but speaking of central governments and what we use, I want to talk about where the 2% inflation target came from. Nick, can you walk us through a little bit of that?
Yeah, yeah. So, in the 80s, in the beautiful country of New Zealand, a gentleman named Arthur Grimes was in a position to try and help New Zealand. They had 10%
Yeah,
inflation
yeah,
going on, kind
right.
of running rampant, creating some problems. And before this, uh, uh, previously there weren't strong strategies to handle inflation, which we experienced, in the 70s. And so Arthur Grimes had the idea to set a target of 2%, and there wasn't a lot of math behind it. They just, they kind of picked a number out of thin air, and thinking that 2% would give them a little bit of wiggle room, right? Room
Right.
to change it, things of that nature. And, we talk about, Joe, I mean, you and I, how often do we talk about the effects of behavioral finance in our
Yep.
world and our economy day in and day out? I think this is a great example of that, whether intentional or unintentional, but
Yeah.
they
Yeah.
established a 2% target, announced it, and made it so, basically.
They did. Yeah.
Everybody, had the expectation I think they had a phrase, 0 to 2 by 92, right?
They did. Yeah. It's kind of their marketing phrase, I guess.
Yeah, yeah. And, what's fascinating, and we still see this today, when you set expectations, and if you're in a position of power and expertise, uh, you can make a lot of things happen. Like we
Yeah.
heard
Yeah.
earlier from John Law, And so they set the
Absolutely.
target of 0 to 2%. People expected, what? This is what's going to happen, right? So they started planning ahead,
Yeah.
and inflation, like you and I talk about sometimes, inflation is kind of ethereal,
Yeah.
it exists in
Hmm.
people's mind, and we see it on paper, but it's all almost a self-fulfilling prophecy to a degree. Now there are
It is.
inputs, and
Yeah.
there
Sure.
are things that can
Supply
certainly
chain, things
have
like that.
exactly
Hmm.
legitimate impact, but
Yeah.
there are a lot of pieces to it that I mean, look at the rise in housing market prices during COVID, right? Uh,
Sure.
I'll- and we saw this in 08, 09, well, I guess 06, 07, 08,
Leading up
uh,
to 08, 09. Yeah. Absolutely.
exactly, yeah, exactly, where people were
Hmm.
were speculating and buying houses purely based on the expectation that they would go up, right? So
Yeah.
people,
No, you're right.
yeah, people, those in power that are pricing product or what have you, paying payroll, their expectation sometimes is that these prices will be higher, and then that makes it so, Uh,
Yeah, that's true. I mean, that's kind of a good transition for us to talk a little bit about what historical inflation has looked like, at least in the US.
sure.
So, I pulled this data from the Bureau of Labor Statistics, and really starting, you kind of mentioned we had a bout with inflation in the 70s, and for some people, they're probably around and can remember that. For you and I, we weren't, so that's not something that we remember. However, starting in 74, inflation was, according to BLS, was 8.3%, 75 9.1, and it kind of stayed in that range until it peaked in 1980 at 12.4%, and then it slowly started to come down by the mid 80s. We were back to a more reasonable 4%, and the Fed still worked to get that down until what we're more familiar with most recently has been really kind of in that 2% mark since the the 90s. Really, we've been really in that 2% mark, except for now 2022, and a little bit started in 2021, but now 6.2 in 2022. So the highest we've been since the 80s. But Nick, let's talk a little bit about how that affects real estate performance and why people perceive, right or wrong, that real estate is a good hedge against inflation.
Sure, sure. Well, I mean, there are a number of key reasons. A lot of it on an individual basis, right? If you own your home, you can lock in a rate on a 15 or 30-year mortgage,
Right.
except for fluctuations in escrow on your mortgage payment, the actual payment itself is fixed, right? I mean, assuming again that you have a
Yep.
fixed rate loan. So that means that you should be able to, for 15 or 30 years, right? Your cost of housing may end up on a tangible basis. Cost of housing should hopefully be decreasing over time, right?
Right.
Creating
Right.
more money to go into the
Exactly.
economy, et cetera, et cetera. What we see on the investing side, what we do, so much of what we do is leveraged, right? We have a
Hmm.
huge, I mean, that's part of how we can make so much money for our investors, is because we're able to leverage to this degree. And when we have a period of inflation, uh, you know, uh, our inputs certainly go up, but also the costs of rent goes up for people because
Hmm.
we want to stay up with current market rates.
Yeah.
And over time, the value of that property, maybe it's because of perception, because people, expect the price to stay the same. But we see that housing prices, when you look historically, have uh, increased
Well,
annually by what I think 2.25. Go for it.
yeah, no, I mean, about what inflation historically is what, the home prices have increased. So yeah, it's a great hedge. Now, I will say there's a caveat when it gets above the 5% range or so, just reading different articles, and we'll provide some of those for you. That, that's where it gets a little bit more dicey on whether or not real estate keeps up. But historically, it has it's able to do so. And like Nick mentioned, you're paying hopefully less over time for your mortgage. If you're renting, you're going to pay more over time because rental rates will increase with inflation. And then I think the other important factor, because we came from, again, Nick and I both came from the financial services industry. Um, it has very little correlation to the stock market, which is important in an inflationary period.
Absolutely, absolutely. Hard assets. There's a lot of value in hard assets
Right.
directly, and especially with such a necessity, right? Everybody needs a roof over their head. We see hard assets like gold and silver, but those are more speculative. But somebody's home, you know,
Mhm.
uh, that's something that people arguably can't live without, right? Um,
Right. Right. Yeah, agreed. Well, so I think what I want to highlight now is real
yeah.
quick 2022, 6.2% was what inflation ended up being, according to the Bureau of Labor Statistics. What is your prediction, Nick, for 2023? What do you think we're going to end the year at?
Yeah.
We're
Uh,
going to be wrong. We know that. But
we're
what's
gonna
your
be
prediction?
wrong. We're gonna be wrong. Please, this is not a recommendation. Please do not put money based on this guess. No, personally, I think we've got an FOMC meeting tomorrow, where speculation is we're looking at maybe another 0.25% rate increase, right? I think that personally, I think maybe we'll probably end the year, I'm going to say between 3 and 4%. That's my guess.
Really? Okay. All right. I like it.
Yeah,
I think if that happens, that's a positive thing.
I think so too. I think so too. But one of the difficulties with inflation, and we've seen this, right? I mean, think about how many
Hmm.
times we heard, oh, this is going to be transitory inflation. It's transitory, that word was everywhere.
Yeah. Yeah.
Uh,
Yeah.
yeah, but the difficulty that we see is that like you mentioned earlier,
Hmm.
inflation is such a backward looking number, right? It's always based on what has been. And then if you're trying to project, you're looking at what has been, if you're trying to look at what might be, there's a gap in the middle that is
There
right
is.
now, right? That's so ill-defined and difficult to understand. It's I certainly don't have any desire to be in a position of power where you have to make that kind of guess, because I
Yeah.
don't think there's any way to win.
Well, you bring up some really good points, and that's a great way for us to transition. First of all, my prediction for inflation for 2023 is 5.1%. So
That's oddly
we're gonna see who's
specific.
closer. Yeah, I mean, well, I mean, you gotta be specific, right?
Okay, I'll
5.1 is
say
what I'm going with.
3.6. Okay, all right.
Okay. All right, there we go. There's our predictions. Nick mentioned FOMC. He mentioned, basically trying to figure out how to control inflation. So that takes us to our next topic that we're going to have on the next episode is interest rates.
Interest
So
rates.
that's a little peek ahead to what we're going to be talking about next time. And we're going to dig into a little bit of those numbers and kind of what we think might happen over the next year or so as Nick mentioned, the FOMC continues to try to battle inflation here.
Joe, I'll tell you, and I know we've got a few minutes left here, but I'll tell you, one of the things that I find interesting in doing some of the research and the studying for our podcast today, there are some economists that feel like a target of 2% is too narrow when it comes to inflation.
Yeah, I saw a lot of that.
Yeah. With the
Yeah.
idea that something closer to 4, 5, or 6%
Mm-hmm.
would provide more flexibility. I
Sure.
like to think about inflation being the I'm a fan of engineering. I like to think of inflation as the heat from a motor, the motor being,
Mm-hmm.
our economy. And when things are moving a little too quickly, things are starting to get out of control, building up too much heat, that heat or inflation can climb, And so the idea
Right.
that or the argument that these economists make is with a higher target inflation number gives us more wiggle room, us, FOMC, whoever's, in a central bank like position to try and control what those numbers look like or influence those numbers. So I'll be
Sure.
curious, I think it'll be interesting to see how this continues to evolve over the next, years and decades.
Absolutely. No, I agree. Yeah. Well, I mean, that kind of concludes our talk on inflation. So remember to send us any questions you have, any comments.
Comments.
Yeah, we're gonna include the website address. We'll include emails, things like that. We'll include articles where we got some of this information from, and some other resources if you're interested in the topics that we covered today. But as always, thanks for joining us on the Capital Grounds podcast. Honored to have you, and
We
Nick.
appreciate your time.
Yeah,
Yeah.
thanks for being here,
Joe,
Nick.
thanks for
So
likewise. You as well. You as well. We'll look to talk again here soon. But, if you haven't checked out our website yet, check it out, sitgcapital.com. And would love to hear from anybody listening or watching. All right, Joe. We'll catch you later. Take care.
thanks, everybody.